Great. I think we're going to get started now. So good afternoon, everyone. And on behalf of the Spanish Chamber of Commerce in the UK, I'd like to give you a very warm welcome to this afternoon's webinar on the topic of the EU's new VAT e-commerce package. We're really pleased to be holding this session alongside Andy Spencer, who is the Director of Consulting Services at Sovos, which is a provider of tax compliance and regulatory reporting software and a Benefactor member of the Spanish Chamber of Commerce. So a little bit about our speaker today, Andy. So he joined Sovos in 2009 and delivers major international VAT projects for blue chip clients, bringing expertise in both structural compliance and commercial efficiency. Andy specialises in providing clients with bespoke VAT reviews that help them develop into new territories with the appropriate controls in place to manage VAT effectively. So after Andy's presentation today, you'll be able to ask any questions that you might have. You can see on the bottom of your screen there's a Q&A function or the chat function. So please do feel free to write any questions you might have at any point in one of those two ways. I'll now hand over to you, Andy.
Thanks very much and good afternoon, everybody. So this afternoon, we're going to talk about the new EU VAT e-commerce package. We'll touch about the reasons why it's been introduced and what it's about. We'll then look at marketplace liability. There's some new rules in relation to sales that are made via marketplaces. We'll then cover eligibility to use the one-stop shop, which is one of the aspects of the e-commerce package. We'll look at some of the things you need to think about in determining whether it's the right scheme for you. We'll then look at some practical issues. And then finally, we'll just touch on some of the changes that have been made in the UK following the end of the transition period at the start of the year. As we've said, there's an opportunity to ask some questions at the end. So the e-commerce package is, the reason it's been introduced is VAT has been on a long journey since it was introduced in the EU. Single market was introduced in 1993, and there's a recognition that the way businesses trade and the way that business is done have significantly changed since that time. So for example, back in 93, e-commerce was in its infancy, the internet was not what it is today, and people didn't buy goods and services in the same way as they do now. So over the last few years, the EU Commission has been looking at VAT, and there's been a number of reports which have looked at how that and the digital economy should be treated. So for example, back in 2015, there was a document about the digital single market strategy for Europe. And then VAT specifically in 2016, there was another document which looked at producing a single EU VAT area. So the concept being that it should be as easy to trade with someone in a member state at the other side of the EU as it should be with someone just down the road from you. So some of the changes that are being introduced now are trying to achieve that aim, to simplify cross-border trade. So there's a recognition that the current rules in relation to distance selling, so where a business makes an intra-EU B2C sale of goods and services, are particularly onerous. So and they're a barrier to developing intra-EU trade and allowing businesses to trade easily throughout the EU. So the result of the current rules are that large businesses that have a high level of B2C sales intra-EU have got to register in multiple member states. So that can be very expensive, it can be very time consuming, administratively it's burdensome, and it's not in line with the idea of a single market. So the idea behind these new rules are that that's going to be a thing of the past if the business so chooses. There's also a recognition that there's abuse of low value consignment relief. So the way non-EU sellers at the moment can sell into the EU is that if the goods are below 22 euros, they can enter the EU free of VAT. So you've got sellers in China, in the US, selling low value goods without having to charge any VAT to the customer. So that gives them a price competitive advantage over a local seller who has to charge VAT irrespective of the value of the goods. So it's looking to remove some of those abuses and create a level playing field between EU and non-EU businesses. And finally, there's marketplaces have taken off in a way that were just not considered back in 93 when the current rules were devised. So the increased use of marketplaces where multiple sellers, often small sellers, can sell their goods and services on a marketplace makes collection of the VAT more difficult for the tax authorities. So the European Commission was looking to change that to make it easier for tax authorities around the EU to be able to collect VAT. So if we have a look at some of the changes that have been introduced, one of them is in relation to the place of supply rules for intra-EU B2C goods. So those rules are changing as of the 1st of July. So at the moment, the way it works is that each country has a threshold. Once you've exceeded that threshold, you have to register for VAT in that country and charge local VAT. So the thresholds vary between 35 and 100,000 euros. So you can actually have quite a high level of sales before you have to register. So the result is that many businesses, even though they've got relatively high levels of intra-EU B2C sales of goods, only have to be registered in their own member state, or at worst in a couple of others. As I've said earlier, very large businesses have to account for VAT in all countries because they're going to be above those thresholds. But what that means is that in many cases, the member state where the consumption is taking place, so where the final customer has the goods delivered, doesn't get any tax. So what the EU wanted to achieve was to allow that tax to be collected by the tax authority in the member state of delivery. So what they've done is they've removed those country-wide thresholds and replaced them by a single threshold of 10,000 euros. And that's not per country, that's in total. And the idea being that that 10,000 euros will remove micro businesses from having to comply with these new rules. The way the threshold works, it applies to B2C intra-EU supplies of goods, and also TBES services, which is telecoms, broadcasting, and electronically supplied services. So if the value of those sales is below 10,000, you can continue to charge that based on where the goods are dispatched from. But once you've exceeded that 10,000, and most businesses I think will, the place of supply of delivered goods becomes where the transport ends. So for example, if you're delivering the goods from Spain to customers in France, Germany, Italy, Latvia, Lithuania, and your sales to those countries are above 10,000, you'll have to account for that in each of those countries. So theoretically, you could have to account for that in all 26 other member states. So it increases the burden on business. So there's a liability to account for that in potentially a significantly increased number of countries, because the EU wants the VAT to be declared and paid where the goods are actually consumed. The other change that's happening, as I mentioned, is this removal of this low value consignment relief, this 22 euro threshold. So that will no longer apply. So what happens is that basically any goods, irrespective of their value, will now be liable to VAT on import. So that will remove the distortion of competition between EU and non-EU sellers, but clearly gives the tax authorities in each of the countries a challenge, because they've got to collect VAT on relatively low value goods. And that was one of the main reasons the relief was introduced in the first place, was to remove that need for collecting low value amounts of VAT. The reality is that the scheme has just been abused, and there's so many goods being brought in below that value that they can't continue with it in order to create that level playing field. So under both of those different measures, what you can see is that the requirement to account for VAT in other member states is going to increase significantly. In some cases, business will have to account for VAT in every member state. So to mitigate that, the current mini one-stop shop, which allows VAT to be accounted for in multiple member states in a single member state, is being expanded. So what they're doing is they're changing the rules, saying that you're going to have to account for VAT in a lot more countries if you've got sales to those countries. But on the other side, they're saying, well, actually, we're going to make it easier for you in order to account for that VAT. So this one-stop shop, so there's three variations of the one-stop shop, which we'll call OSS for short. So there's the Unionos, so that covers intra-EU B2C goods. So for example, that example where the goods are going from Spain to France, that's an intra-EU B2C supply. The customers are a private individual. Sales by marketplaces. So marketplaces are businesses such as Amazon, other large platforms where they facilitate the sale between the supplier and the customer, even though they don't take title to the goods. And the Unionos can also be used for intra-EU B2C services by EU businesses. So for example, if you're providing an electronically supplied service from Spain to a customer in France, that can be covered under the Unionos. And basically any service which is provided intra-EU B2C can be accounted for in that way. There's also a version called Nonunionos. So that's for non-EU businesses to account for their B2C services. So if you're an EU business, you won't use Nonunionos. And the final one is Importos, and this covers imports of goods below 150 euros. So the place of supply of those goods becomes the country of delivery, and the Importos allows the VAT to be paid at the time of the sale. So the supplier will charge it at the time of the sale, and then there's no liability to import VAT once the goods are actually imported. So the concept behind each of those variations of OSS is that the VAT is due in the member state of consumption. So in that example where the goods are sold from Spain to France, the member state of consumption is France, because that's where the goods are consumed. And the VAT return, the OSS return, is filed in the member state of identification. So if you're a Spanish business, your member state of identification is going to be Spain, because that's where your business establishment is. And that's the same for OSS and for IOS. So you would only register with the Spanish tax authorities. If you've got a non-EU business, the member state of identification is slightly more complicated. For Nonunionos, you can choose. For Unionos, it needs to be a member state from which you dispatch goods. So for example, if you're a UK business, you import goods into the Netherlands and then you sell from the Netherlands to all other member states, you can register for Unionos in the Netherlands. And then IOS, there's the concept of an intermediary for non-EU businesses. So they would have to register where the intermediary is registered. So if we look at those in a little bit more detail, so start with IOS, so the import one-stop shop. So that's available, as I said, for goods delivered from outside the EU to customers in the EU. The goods, if they're in a customs warehouse, they're not considered to be delivered from outside the EU, because even though they haven't been cleared into free circulation, they're physically in the EU, so you couldn't use IOS for those goods, but you could use OSS, as we'll come on to in a moment. This is only a scheme for B2C supplies, so it doesn't cover B2B transactions, so the customer can't be a taxable person. The goods can't be subject to excise duty, so if it's tobaccos or alcohol, you can't use IOS because excise duty is going to be due, and there's no scheme at the moment to account for excise duty in a single place, although that's something that the Commission is working on for the future. The intrinsic value of the goods, the consignment, must be lower than 150 euros. So when we talk about intrinsic value, what we mean is the value of the goods themselves. So if you charge separately for postage and packing, and you disclose that charge to the customer, that charge for postage and packing isn't part of the intrinsic value of the goods. So for example, you could sell goods for 140 euros. You've then got a postage and packing charge of 20 euros. You've then got VAT on top at the rate of the country the goods are being delivered to. So you could have a total sale price of 180 euros, but that would still be eligible for IOS because the intrinsic value of the goods is 140. So you can take out the postage and packing and the VAT itself. So the seller can be established anywhere, so it's available for EU and non-EU businesses. The key thing is where the goods are. It also applies to goods sold on a platform. So if goods are being sold via Amazon, IOS can still be used, and it's not compulsory. So the way the EU has devised this is that you don't have to use IOS. You could continue to do things in the way you do at the moment, or they've also got another mechanism where the VAT can be paid to the courier that delivers the goods, called special arrangements. So you don't have to use it. It might be in the future, it becomes compulsory, but but at the moment it's an optional scheme. If we then look at Unionos, so Unionos is for goods that are delivered from within the EU. So that's, as we talked about, that can be goods that are over 150 euros if they're imported by the supplier and then immediately dispatched to a consumer in another member state. So that example where, say, a UK company delivers to the Netherlands and then from the Netherlands then sells to final customers, that can be accounted for by Unionos. It's got the similar conditions to IOS in that the customer can't be a taxable person, so it's only for B2C transactions. The condition in relation to excise duty, it can apply in some cases. So if you've got excise goods, you need to think about it. There's no upper limit to the value of the consignment, so you could sell goods for any value. Again, the seller can be established anywhere, so the key thing is not where the seller is in determining whether you use Unionos or not, is where the goods are when they're being sold. And it also applies if the goods are sold on the platform. Sale of services can also be covered by Unionos. So they can only apply for services which are considered to be intra-EU. So for services, the place of supply rule for B2C services is where the supplier is established. So if you're supplying a service which falls under the general rule, you would charge local VAT. So if you're a Spanish business, you would charge Spanish VAT. You would account for that on your Spanish VAT return, and you wouldn't need to use Unionos. But there are a number of exceptions to that general rule, which then make the service an intra-EU service, and that will mean that the VAT's due in a different member state. So for those transactions, the way it works at the moment is that unless it's a TBES service, so telecoms, broadcasting or electronically supplied, which you can declare under the mini one-stop shop, you would have to register for that in each country. Going forwards, that requirement to be registered in each country is removed because you can use Unionos. So just looking at some examples, if you run an event in another country and you charge admission, the admission to that event, the place of supply, is where the event takes place. So for example, if you run a B2C event in France, the place of supply is France. So you have to account for that in France. You could account for that VAT using the Union one-stop shop. So that would remove you from the liability to be registered for VAT in France. And if you ran events in all countries, you could remove that need to be registered and account for the VAT on that Union one-stop shop return in Spain. Similarly, if you provide a land-related service, so for example, if you provide construction services, B2C, that's where the land's located. If you provide intra-EU transport on a B2C basis, that's where the transport starts. So if the transport was started in another country, the liability to account is in that other country. Work on goods, the work is the place of supply is where the work's carried out. So that could be Spain if that's where the work's carried out, but equally it could be another country if you send it to a subcontractor. And TBES, that's where the customer resides. So there's a number of different services where the rules are different, where you created that liability to account for that in another country. One of the main things to think about for services is that Unionos is only a mechanism to pay VAT to the tax authorities. You can't recover any VAT on your costs under the Unionos VAT return. So for example, if you're running an event in France, you're probably going to incur some local VAT on your costs. If you have to hire a venue, if you're providing catering, they're going to incur local VAT. So it might not be the right solution for you. And finally, we just very quickly look at non-Unionos. So this is effectively the version for non-EU businesses. So those businesses at the moment for TBES services can use non-union MOS. Going forwards, as with Unionos for services, it can apply to any type of service at all. So as we've said, register in any member state. There's no threshold in relation to non-Unionos, so businesses have to register straight away, and it's submitted on a calendar quarterly basis. And because the business is not established within the EU, any services to customers within the EU are accounted for in the non-Unionos. There's no concept of a local supply because there's no local presence, no local place from which to supply that service. So the consequences of OSS, so you need to think about those consequences. So if you're registered in other member states at the moment because of distance selling, you might have obligations. For example, in Hungary, there's real-time reporting, which is being extended to sales on a B2C basis. At the moment, that only applies going forwards if Hungary is the member state of identification. So if you're a non-Hungarian EU company, real-time reporting won't apply to you in the future. Spain's got its immediate supply of information. That will continue to apply if Spain is your member state of identification, but not if it's not. Intrastat is an obligation that currently exists. So if you're above the thresholds for Intrastat declarations because of distance selling, you have to submit a declaration in the member state of dispatch, then also in the member state of arrival. It's not clear what's going to happen with Intrastat as a result of OSS. That registration in the member state of dispatch will continue. So logically, there'd be a requirement to continue submitting dispatch declarations. But if you use OSS, you're not registered for that in the member state of arrival of the goods. So it's possible that that will be removed, but we're continuing to monitor the position, and it's something that there hasn't been a huge amount of publicity about yet. If we now move on to marketplace liability. So tax authorities around the world are recognising the increasing use of marketplaces. So businesses from all over the world can use a marketplace in order to gain access to a local economy. So what they're starting to do is recognising, well, actually, I can try and collect all the tax from all those individual sellers, but that's a very difficult job. And if they're in a territory outside the EU or outside the local jurisdiction, if they don't pay that VAT, it's actually very difficult for me to try and collect it. So it's much better to make that marketplace liable for the VAT, because that marketplace often will have a local presence. So if I need to collect the money, it's much easier to do it. So there's a reduced administrative cost for the tax authority. Increases the amount of VAT collected as it removes the risk of non-compliance. So if you've got a seller from a non-EU country selling goods on a platform accounts, so they can collect the money much more easily. The implementation is different in each territory, but it's something that's happening all around the world where their marketplaces are active. So that's what the EU is going to do. So they're going to apply marketplace liability where the marketplace facilitates the sale in a number of different situations. So if the goods are below 150 and imported from outside the EU, the marketplace has got the liability. And that liability applies irrespective of whether it's an EU or a non-EU seller. So if you're a Spanish business and you're selling goods to a customer in France with an intrinsic value of €100, and you get those goods drop shipped from China directly to the customer, but you sell them via a marketplace, the marketplace has got the liability for that sale. Equally, if that Chinese business sells them directly to that French customer, the marketplace has got the liability there. So the marketplace liability also extends if you've got sales made by non-EU sellers in the EU. So for example, you've got a UK business that's got stock in Germany. Sale is facilitated by the marketplace. The liability to account is with the marketplace because that's an EU sale by a non-established business. But if you've got a Spanish business that's got stock in, for example, Amazon FBA, Amazon facilitates that sale, but because the Spanish business is an EU business, they've got the liability to account, not the marketplace. And I mean, that example I used, so Unionos is normally only applicable for intra-EU supplies of goods. The only exception is if there's a sale by a marketplace, because it can also then cover local sales of goods as well. So from a contractual, from a legal point of view, there's a transaction between the seller and the final customer. So the marketplace facilitates the sale, but it doesn't take title to the goods. But from a VAT point of view, there's a sale from the seller, so what we call the underlying supplier, from them to the marketplace, and then from the marketplace to the final customer. So there needs to be rules on what's the VAT treatment each of those transactions. So the way it works is if the goods are outside the EU at the point of sale, so for example, the goods are going from the UK and they're below 150 euros and they're going to be sent to a customer in France, the supply by the underlying supplier to the marketplace is outside the scope of EU VAT. So there's no need for them to raise an invoice, no need for them to be registered because their supply is outside the scope. Marketplace will then account for VAT on the sale to the final customer in the customer's country. If the goods are inside the EU at the point of sale, so this applies for non-EU businesses, there's a zero rated supply in the member state where the goods are located. So if you've got a US business selling goods in Amazon FBA warehouse in Germany, it's making a zero rated supply to Amazon. Amazon then accounts for VAT on that sale to the final customer. So that business, that US business, would have to register for VAT in Germany, could then use that registration rule to recover any VAT that they've incurred in getting the goods into Germany in the first place. So marketplace liability is an issue for EU businesses. It's only going to be in relation to imports. So if we now move on to the eligibility to use OSS, so there's a number of things that you need to think about, and there can be a combination of OSS variations that you need to use. So some of the things you have to think about is, are you selling only from one location, or have you got warehouses inside and outside the EU? If the goods are in the EU, that's OSS. Potentially you could have a number of different warehouses within the EU. So for example, you could have a warehouse in Spain for the Southern European market, and then another one in Poland, another one in Denmark. If you use OSS, you have to use OSS for all transactions that you undertake where OSS is applicable. We'll move on to that in a moment. I'll work through an example with you. If the goods are outside the EU, they can be reported on IOS. So one of the complications that you could have is that, and some of our clients have got this issue, is that they've got warehouses both inside and outside the EU. So when a customer places an order, they don't necessarily know which warehouse is going to fulfill that order. Sometimes it's going to be based on where the stock is. So at the point of sale, they don't necessarily know whether it's going to be an EU sale or an import. So that creates complications because they need to work out, well, how am I going to account for this VAT? The other thing to think about is if you're going to be selling via platforms. So as we've said, platforms can be liable to account for the VAT depending upon the nature of your business and where the goods are located. So you need to take that into account, because if the platform's liable, you haven't got that liability to account for the VAT. So you need to take that into account in the price that's being charged. And the other thing that can happen, which again, a number of our clients are finding, is that we think of platforms and we think of people like Amazon, but the reality is that the way a lot of businesses are set up is they can become platforms in their own right. So for example, if you're selling third-party goods and you're facilitating the sale but not legally making it, you could then become a platform in your own right, and then the marketplace liability rules can potentially apply to you. So it's really necessary to understand and map out the supply chain and think about, well, where are goods going from and to? Am I the marketplace for any of those transactions? Because if you've got the liability and you don't account for it, the tax authority is going to come after you because you're the person who should be paying that VAT to them. If we then briefly look at registration, so the registration mechanism is slightly different in each case. So for Unionos, this is for intra-EU B2C sales of goods and services. So it's the same number as your normal registration number. So for example, if you're a Spanish business, you've got your Spanish VAT number, your Unionos number is going to be the same number as your Spanish number. You need to apply to make it applicable to OS, but you're not going to get a new number. If it's IOS, there is a separate application to the tax authority, and you'll then get an IOS number. That IOS number then needs to be included on the customs declaration. When the goods arrive at customs, the number will be checked by customs to check it's valid. That will then mean that there's no liability to import VAT at the time of entry of the goods. And the reason the threshold is set at 150 euros is because that's the threshold for customs duty. So basically the goods can come in without any customs duty or any VAT. Supplier is charged VAT at the point of sale and will pay that VAT to the tax authorities on their IOS return. So that IOS number effectively allows the goods to move quickly through customs without any import VAT having to be paid at that time. So once you're registered, you then need to submit IOS or OS returns. Again, the frequency slightly differently. So for Unionos, it's calendar quarterly returns. And the rule is that you submit by the end of the month following the quarter. So the first Unionos returns will be from the 1st of July to the 30th of September, due to be submitted by the 31st of October. Import OS is monthly. Again, you have to submit by the end of the month following the, end of the month following the month, not the quarter. It's important to recognise that you can be excluded from OS for repeated failure and also for non-payment. So in both of those cases, if you've failed to pay after a reminder is issued 3 times, you'll then be excluded from the scheme. And the consequence of exclusion is that you would need to account for VAT wherever the customer is based. So for example, under Unionos, if you're excluded from the scheme and you make sales to customers in every other member state, so 26 other member states, you'd have to register for VAT in each of those member states. So once you use it, you need to make sure that you can stay on it. You can also be penalised by the member state of consumption, so where the VAT's due, for late returns and payments. So again, because there's one return, potential for multiple penalties if you're late. So it's really important that payments are made and returns are submitted on time. There's also record keeping requirements imposed if you're going to use OS. So they've got detailed record keeping requirements. The way it's going to work is that you have to provide on demand those records to the tax authorities. So they can make a request because they want to carry out an audit. The request will come from the member state of identification, and you then need to send them electronically the required information. You've got 30 days to do that. If you don't do it, you'll get a reminder. And if you don't provide them within the terms set out in the reminder, you can also be excluded from OS or IOS going forwards. And unlike with the returns and payments, one failure can result in exclusion. So it's really important that if you're going to use these schemes, that you have access to the records. Ideally, you can produce them on demand. Our advice would be not to react once the tax authorities ask for the information, because they could ask for it for a long period of time, and it might be really difficult to get all the information they require just by acting reactively when they make the request. So again, that exclusion will result in registration being required in all member states where VAT's due. The exclusion lasts for the remainder of the calendar year in which you're excluded, plus the next 2 calendar years. So it's going to be a long time before you can get back on the scheme. Our expectation is that audits will increase. So at the moment, if you're a distance selling business, it's unlikely that you'll get audits. The tax authorities seem to be quite happy because you're constantly paying the money. They seem to be quite happy to just take that money without necessarily verifying whether you're paying the right amount of money. The only time they do audits is if there's a retrospective liability in our experience. But going forwards, it's going to be much easier for tax authorities to do an audit. So our expectation is that it will be an increased level of audits, and therefore an increased level of records being required to be submitted. So if we move on to some of the OSS considerations. So if we're EU businesses, the key thing is working out where the goods are rather than where the business is. So sale of goods located outside the EU to customers in the EU, as we've said, that's an OSS registration. So you can use IOS in order to remove the need to be registered in multiple countries, and also to remove the burden on your customer. So that's for goods up to 150 euros. If it's a marketplace, so the marketplace will have the liability. So if that marketplace has facilitated the sale, the marketplace has got the liability to account for the VAT. It's an outside the scope transaction from the EU business to the platform. So there's no liability to account for any VAT on that sale. One of the challenges that our clients are facing is what happens what do you do if you've got some goods that are below 150 euros and some goods that are above? Because you can't use IOS for goods above 150. So that's something that you'd need to think about. So there's a number of strategies. Do you import into one country? Do you set up a stock of goods within the EU and only supply EU customers from that stock? So it's something that you need to think about to work out what your strategy is going to be. If those goods are within the EU and they're sold to customers, so the business's own OSS registration can be used for intra-EU deliveries. The important point there is that it's only intra-EU deliveries, so you'd need a local registration if you're going to make a local sale. So for example, if you've got a warehouse in Germany and you're going to sell to German customers from that warehouse, you'd need a German VAT number. If you sell those own goods to a customer in the EU via a platform, the platform doesn't have the liability in this case, because that liability for EU sales is only if it's a non-EU seller. So again, you could use your own OSS registration for intra-EU and a local registration for that local sale. But the reality is that it can become quite complicated. So there's a number of different permutations. So if we just quickly work through an example, we can see where the complexity can arise. So for example, if there's a Spanish business selling goods from located in Germany via a platform to a German customer, that would need to be reported on the seller's German VAT return. So that's a local sale in Germany. So the platform doesn't have liability because it's an EU company, but it's not an intra-EU sale, so it can't be declared via Unionos. So there's a need for a local German registration. Same thing applies if it's not via a platform. So in that particular instance, it doesn't matter the nature of how the sale's made. The key thing is where the goods are being sold from and to, which in both cases is Germany. If you've then got goods delivered from a German platform, so Amazon FBA in Germany, to a French customer. So this is an intra-EU transaction. Marketplace doesn't have liability, so therefore it can be accounted for on the seller's Spanish OSS return. We've got, again, goods delivered from a German warehouse, not a platform, to a French customer, exactly the same thing. So the treatment's the same in both cases. We've then goods locally from a Spanish platform to a Spanish customer. So there would be on the business's resident, because it's not an intra-EU supply, so it can't go on OSS, and it's not a marketplace liability transaction either. You've then got qualifying goods delivered from a UK supplier directly to a German or a French customer. So for example, the goods are purchased from a UK supplier who drop ships to the final customer. So that can be reported on the seller's IOS return. And finally, that same transaction but being sold by a platform, that would be reported on the platform's IOS return, because the marketplace liability applies in this case because it's a sale of goods from outside the EU. So you can see there you've got a number of different transactions and you've then potentially got 5 different declarations that it's declared on. So it's important to understand exactly which one it has to be declared on, how you're going to deal with it, and therefore making sure that you've got the accounting correct and the correct amount of monies are being charged to the customer and accounted for between the business and the platform where applicable. If we look at some practical issues, so one of the key things is excluding B2B sales. So some businesses have set their websites up so that they're purely B2C, but businesses will still buy. How do you exclude B2B sales? Because they can't be accounted for by the Unionos. So in practice, you'll probably find out if you do have a B2B customer, because if you're charging them VAT, they won't be able to recover it via a Unionos registration. One of the key factors is the correct VAT rate. So the VAT that's due is due at the rate in the member state of delivery. So you're going to need to know what VAT rate to apply. It becomes more complex if there's reduced rates, because the way reduced rates work aren't always the same. So it's not necessarily the same in each member state. If you do sell excise goods, how do you identify those goods? There's consignments that contain excise goods. So as we've said, some goods they're not eligible for IOS, but they might be eligible for OS, depending on who the customer is. For IOS, you need to think about the intrinsic value. How do you work out whether the goods are going to be eligible for OS? And the way IOS works is it's about the value of the consignment, not the individual goods within the consignment. So you need to think about that. And also what's going to happen if there's exchange rate differences. So there's always going to be a delay between when you calculate when the VAT's due and when the goods are actually imported. The guidance from the EU is that you make it clear what exchange rate you've used if you've charged in a different currency than the reporting currency in a member state of India. There's also a potentially difficult issue in relation to displaying VAT due at checkout. So the European Commission have introduced a number of documents in relation to IOS and OS, which provide guidance and information about what you need to do, how you need to use the schemes. One of the things they've said is that you need to show the amount of VAT that's due, that's going to be paid by the customer, no later than the order is confirmed. So if you've got a Spanish business selling goods to a customer in Hungary, what the guidelines say is that you need to tell that Hungarian customer what rate of VAT, how much VAT they're paying before they complete the order. So if it's standard rated, that would be VAT at 27%. So that means there needs to be a real-time calculation of the VAT that's due. Now it's interesting that that's in the guidelines, but it's not in the implementing regulations. So it's not in the law, but it remains to be seen what member states will do with regard to enforcing it. So we've spoken to the Commission about this, and they've explained it's essentially based on consumer law and the principle that once you've agreed a price with a customer, you can't then add additional costs. But the reality is that once you've agreed a price at checkout, you don't add in additional costs anyway, because that's the price that the customer's going to pay. So it'll be interesting to see how this develops, and there's a lack of information at the moment about how that's going to be enforced. The other practical issue is in relation to record keeping. So the record keeping will include some of the typical items you'd expect, but it also includes information like goods being returned, payment details, delivery addresses, etc. So how are you going to get that information from your systems? Because sometimes they're going to come from different systems. They're not all going to be from your accounting system. So that's the EU scheme. Just very briefly cover the UK scheme. So obviously the UK was part of the EU until the end of 2020. And had we remained a member, we would have implemented or been implementing the e-commerce package on the 1st of July. We left, so we decided to do something similar, essentially for the same reasons, because the low value consignment relief meant that there was a significant loss of revenue. So the UK scheme has got essentially 3 different variations, and that's because of Northern Ireland. So Northern Ireland, because of the Northern Ireland Protocol, is treated differently from the rest of Great Britain. So Great Britain is England, Scotland and Wales. Northern Ireland is added to make the United Kingdom, but Northern Ireland have got different rules. So this is non-UK to GB, non-UK to Northern Ireland, and goods within the UK. So some differences between how the EU and the UK schemes work. So the customer can be a taxable person. So it's not just B2C like the EU. Same restriction in relation to excise goods. The intrinsic value of the goods in the UK is 135, which is essentially the equivalent sterling value of the euro amount. And in the UK, the 135 is the threshold on which customs duty is payable. So it doesn't matter whether the seller's established, got marketplace liability rules in the UK. Significant difference between the UK and the EU is in the UK, it's compulsory. There's no, you haven't got a choice. If the goods that you're selling fall within the scheme, it's compulsory for you to use it. One thing the EU is thinking of doing in the future is making IOS compulsory, but at the moment, as I've mentioned, it's optional. You don't have to use it, although it might give you the right answer for your business. So if the goods are being sold from outside the UK to Great Britain and they're below £135, the way the UK have done it is again slightly different from the EU. There's no import VAT or duty payable. And instead, they made it a supply by the supplier. So supply VAT is due, which is different from import VAT. So the supplier has to charge VAT at the appropriate rate, and they have to do that if they're a non-UK business from that first sale. So there's no registration threshold in the UK. So for example, if a Spanish business sells goods of £100 B2C to a customer in the UK, they have to register and charge VAT from that first transaction. As I mentioned, it applies to B2B transactions as well, but the way the VAT's accounted for is slightly different. So if the customer provides a VAT number, there's a reverse charge. So the customer will account for the VAT themselves, and there's no requirement for the seller to register in that instance. If the customer doesn't give you a VAT number, you can assume it's going to be a B2C transaction. If the sale is facilitated by a marketplace or a platform and it's on a B2C basis, the marketplace has that liability to account. If it's facilitated a B2B sale, the reverse charge applies. So you've got a number of complications. Is it a business? And the marketplace will have to tell you whether it's a B2B or a B2C customer. If the delivery is to Northern Ireland, so the way things work, so if I'm outside the UK and the EU, and that's important, the customer provides a VAT number, then there's a normal import of the goods. Because the reality is that the scheme the UK has introduced isn't in line with EU VAT rules. So there needs to be a distinction in treatment if the goods are going to Northern Ireland, because Northern Ireland continues to apply EU VAT law. If the customer doesn't provide a VAT number, then it depends on whether it's sold by a marketplace or directly by the customer. If it's a marketplace, the marketplace has got liability. If the sale is direct, the seller's got the liability, but they've got to account for import VAT and then make a local sale. So it's slightly different from the UK because of the status of Northern Ireland. So if the goods are delivered from the EU to Northern Ireland, so for example, from Spain to a customer in Northern Ireland, that's distance selling. So at the moment, registration threshold is 70,000. So you only have to register if your sales are above that. And then the e-commerce rules that we talked about earlier, they'll be applicable from the 1st of July. If the goods are already in the UK, the B2C seller, by an overseas seller, the seller charges VAT, so they'd have to register. If the sale is facilitated by marketplace, the marketplace has got the liability to register. The overseas seller has got the obligation to register because they're making a zero-rated supply, but they could claim exemption from registration. But they will have to think about, well, how did they get the goods into the UK? So the reality is, unless the goods are zero-rated themselves, because of their nature, the overseas seller is going to have to register for UK VAT. If it's a B2B sale of goods in the UK, the rules are slightly different. So the OMP must give the VAT number to the seller. If they don't provide them with the VAT number, the normal B2C rules apply. Okay, so that's a run through of the rules in the EU, and then a quick recap, because our experience is the rules in the UK aren't always known. But if anybody's got any questions, I'll be very pleased to take them.
Perfect. Thanks, Andy. Just turn my camera on there. Thanks very much, Andy, for that. There's so much information that's really, really useful. So yeah, if anyone has any questions, as I mentioned, there's the chat tool or the Q&A tool. You can write them in whichever way you prefer. Okay, so we've got a question here for you, Andy, which is, do you think that once these new systems are established, that I suppose you mentioned, there is a chance that the EU may look at the place of supply rules for the former Schedule 5 services when supplied B2C, with a view to bringing these into new systems, for example, legal services?
I'm not aware of any potential changes that they're looking to make. I mean, the place supply rules have been, the VAT package back in 2010 changed the rules significantly. I'm not aware of any changes to how the place supply rules themselves are going to be changed. So I think the current rules will continue to apply going forwards. Although there is the principle should be that VAT is during the place of consumption, but that isn't always the case. Okay,
fair enough. Thank you. Another question we have here is, there's been a lot of speculation that that the e-commerce package will be delayed further. How likely do you think that this is to happen?
It's interesting because it was supposed to come in on the 1st of January this year. It was delayed because of COVID, because last year tax authorities were overwhelmed, businesses were overwhelmed. So the reality is that they decided they just couldn't implement it. Our view is it's very unlikely it's going to be delayed further because, I mean, we're only 6 weeks away now. So most member states have made preparations. We've been talking to lots of them. They've got systems in place. They're not necessarily the most appropriate system, they're not the best system, but everybody seems to be working very hard towards it. So I think it's very unlikely that that it will be delayed again.
Fair enough, makes sense. Another question we've had is, you mentioned that via the OSS scheme you only declare VAT, but you cannot reclaim it. Would you still be able to I guess it means, would you still be able to access a VAT refund via the annual schemes?
Yeah, so you can. So if there's no local registration, the principle is that you should still be able to recover the VAT. The only thing to bear in mind is that if you're a non-EU business, it's, for example, UK business, it's not via the refund directive anymore, it's via the 13th directive. So the refund directive, you used to make a claim to HMRC on the portal, they would then transmit it to the other tax authority. The way it works now is that you'd have to make a 13th directive claim. That's slightly more complicated. You might need a fiscal representative. There's the concept of reciprocity as well. So reciprocity means that if the country where you're established doesn't allow claims for the member state businesses where the VAT's incurred, they can deny you recovery. So there's a few additional things you need to think about, but the principle is you should still be able to recover the VAT, albeit that there'll be a cash flow cost. And our experience is that if you put in recovery claims via the 13th directive, they're all scrutinised. So it's really important that you've got all the invoices, they've got all the required information, because the tax authorities are looking to refuse those claims if they possibly can.
Okay, brilliant, thanks. Okay, another question that we've had is, would you recommend that we should use OSS for our business? How do I decide whether this is the right option for us?
I think it's a simplification. So the idea is it's there to help businesses, but there's a number of different things which you need to think about. So you need to understand what your obligations are to start with. So how do the changes impact you? Where do you have to account for VAT? That last question, I'm going to incur VAT. Do I want to register normally? Because that might be the best option, because then that will improve my cash flow. Experience normally is that if you're offsetting VAT against output tax, you don't normally get the same level of scrutiny. So there's a number of things which you need to think about. So really mapping out the supply chain, looking at the obligations, doing a cost benefit analysis of, well, this is the cost if I do OSS, this is the cost if I don't do OSS, what are the implications? So it's an exercise you need to go through really to fully understand how it applies to you and what's the best option for you. The thing to bear in mind is if you use OSS, you have to use it for everything. You can't say, well, actually, it would be better if I just had a normal VAT registration in this country. You can't do that. You have to use OSS for everything, all or nothing.
Makes sense. Thank you. Okay, the last question we've had, although if anyone else has any questions they'd like to ask, you can still write them in via the chat or the Q&A. Okay, actually, well, how do I determine what VAT rate to use when I sell to customers in other member states?
I mean, this is one of the really difficult challenges, because you have to apply the VAT rate in the member state where the VAT's due. So for goods, that's where the goods are delivered to. So you need to know whether the goods are standard or reduced rate. So if they're standard, if everything you sell is standard rated, you need to know the VAT rate in all the 26 other member states. If you sell goods which have got a reduced rate, so for example, food has often got a reduced rate, food items, various things connected with food, you need to know how are your goods categorised in each member state. And that can be a really difficult exercise. The EU has got a database, but that's not necessarily that easy to use, because it's a complicated issue, and that's one of the sort of the biggest challenges I think going forwards. If you do things which are reduced rate, because you want to account for VAT at the right rate, because if you can account for less VAT appropriately, you're going to make more margin, and you can potentially reduce your price to increase sales. So you've got more flexibility. Whereas if you just default to the standard rate all the time, you might be losing out on lost margin.
Brilliant, thank you. Well, the last question we've just had in that's just come through now is, what steps must be considered in the ERP system or site platform to comply with the new rules? And what about invoice integration? How does it
I think that with invoices, the way that Unionos works is if you use Unionos, you don't need to raise VAT invoices. So there's a simplification there. With regards to ERP systems, the key thing is working out where the place of supply is. So where's the VAT due? Who's got the liability to account for it? So there's a number of variables in the decision making. So for example, if the goods are, if you're an EU company and the goods are in the EU, you can discount platform liability because you've always got the liability to account. You then need to work out, well, where are the goods shipped from and shipped to? Ship to will give me the VAT, where the VAT's due, but you'll also need to ship from, because if you ship from multiple locations, you need to report that differently in the Unionos VAT return. So it's all about, in our experience, VAT codes, having different VAT codes for different transactions. So you map your transactions, understand all the unique transactions that you've got, allocate them a VAT code, and then work out how that VAT code correlates to the Unionos return. So it's challenging, it takes some work, it takes some foresight, but it is achievable, the main thing you need to know, and talking to some clients, especially platforms, the difficulty they've got is they don't necessarily know where the goods are coming from, because that's information that's going to be in the underlying supplier system. But it certainly takes some thinking, takes some work. And the thing to bear in mind is whether you use OSS or not, you've got to do that work, because the VAT's due where the VAT's due. OSS is just the mechanism for accounting for it. It's whether you use a normal VAT return or OSS, but the same underlying calculations to determine where the VAT's due has to be undertaken.
Brilliant. Thank you very much, Andy, for all of that information. I'm sure it's going to be really useful for everyone, all the participants who've joined us today. Thank you so much for your time, and thank you everyone for joining us and for sharing your questions as well. I'll be sharing afterwards, after this session, a feedback survey, which we'd really appreciate if you could complete, and I'll also include in there the link to the recording of this webinar, so if you'd like to share it with anyone you think it could be of interest to, and also the contact information for Sovos. Clearly, obviously, they're really the experts in this area, so if you have any other questions or if you're interested to know more about their services, please do get in touch with them and we'll make sure you have all the details to do so. And yeah, thank you once again for joining us, and thank you so much again, Andy, for your time this afternoon.
Thank you, everyone.